the last quarter was another eventful one in global markets, as signs of a slowdown in global growth had the market concerned. Chinese regulation was also a big driver of market moves, which negatively impacted the equity long-short book in the hedge fund solutions. These include changes to environmental policies, which led to a drop in the demand for iron ore, putting the diversified mining shares under pressure, as well as an increase in regulation on tech companies, also hurting long positions in Naspers and Prosus. The auto manufacturing industry globally was adversely impacted by global supply chain issues, which had a knock-on effect on the demand for commodities in the PGM basket. Long positions held in some of these stocks, which had contributed meaningfully to returns over the last number of quarters, detracted from performance over this last quarter. The funds benefited from exposure to Rand hedge counters as the Rand weakened against the US dollar over the quarter. The equity market neutral allocation also contributed to returns, taking advantage of the opportunities created by the volatility. The CAP 6 index returned 3.2% for the quarter, but the real story was the dispersion of returns between the different sectors, which was very high. A good example being the almost 20% difference in performance between the Resi index, which sold off, and a strong showing by the financial index. Inflation concerns remain at the forefront of investors' minds as prints remain elevated. The US 10-year yield rose late in the quarter on the back of hawkish talk by developed market central banks and inflation fears. Emerging market yields followed, including the South African benchmark bond, which also sold off in September. Returns from the fixed income arbitrage allocation were varied, with longer-term relative value trades generating strong returns, but positioning for local monetary policy detracted. The hedge fund solutions marginally underperformed their benchmarks this quarter, but are still well ahead on a 12-month basis. We believe the wider hedge fund mandates are well suited to deliver the stated objectives in these volatile markets, with the opportunity set for fixed income arbitrage and thematic equity particularly favorable.